This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, January 22nd, 2015. So the key levels to watch in the euro today are the recent low that we saw, the recent plus 10-year low that we saw at 1460 below, and then above you want to pay attention to previous support in the form of 117.55. A break on either end will give clearer directional bias. The market is trading oversold on the daily chart, but is still locked within a very well-defined downtrend. If we take out 1460, that will expose 113.75, which is a low from November of 2003. Sterling dollar. Cables locked within a consolidation between 150.35 and 152.70, but the market is recently consolidating just off 18-month lows at 50.35. Overall, the pressure remains on the downside with a break below 50.35 to expose the 2013 base at 48.15 further down. But back above 52.70 would take some of the pressure off the downside and then open the door for more of a correction towards the 54.85 area. Dollar yen. Dollar yen continues to be locked within a consolidation, with this market happy to consolidate after a very significant rally over the past several months and recently breaking to 7-year highs at 121.85 in December. But the market should continue to trade higher, and really only back below 115.55 would compromise the immediate bullish outlook. Below 15.55 would keep the pressure on the top side, but would suggest that the market would be looking for a more significant medium-term higher low somewhere in the 110 area ahead of a bullish resumption. Euro Swiss. Euro Swiss has been caught in a consolidation over the past several days, with the market now settling into a new range between 106 and 97.10. A break above or below will be required for the next key directional bias. Aussie dollar. Aussie dollar is locked within a downtrend and is recently stalled out by highs this week at 82.95 and is looking for the next downside extension below key psychological barriers at 80 and then towards the 75 area further down. But back above that recent high at 82.95 would take the immediate pressure off the downside and open the door for more of a correction higher. Ultimately, only back above 85.41 would compromise the bearish outlook. Dollar CAD. Dollar CAD continues its surge, with the market now trading into severely overbought technical territory on the daily chart, and weekly and monthly charts also overextended. However, the market is locked within an uptrend, and the focus now is on a move to fresh multi-year highs towards the 125 handle. But any setbacks, which are expected, should be very well supported ahead of the 10-day moving average, which currently comes in right around the 120.40 area. Kiwi dollar. Kiwi has finally broken down below key support at 76.09. That was the 2014 low, and this sets the stage for a move towards the 72 area over the coming weeks. Ultimately, only back above 80.35 would compromise the bearish outlook, while rally should now be very well capped ahead of 78. The S&P 500. The S&P 500 is currently showing signs of a top, with the market looking to take out key support over the coming days at 1968. A break below 1968 would confirm the topping and expose deeper setbacks towards the October low at 1820 further down. Ultimately, only back above the recent highs that we saw at around 2070 would compromise this outlook. Gold. Gold continues with its surge, with the market trading as high as 1305 the other day ahead of this latest minor pullback. But the focus clearly is on a test of the next key resistance in the form of the July 2014 peak at 1345. Look for any setbacks now to be very well supported into the 1250 area, while only back below 1217 would really compromise the current bullish outlook, since the market has broken out above that key October high that was sitting at 1256. That's all for today.